So people often ask us what's different for pilot financial planning versus regular financial planning. And I would say that, the core planning topics like, disability, your income planning, expenses, what you're saving for retirement, insurance, all that stuff really remains the same. It's just how pilots receive those things are different. So for example, airline pilots typically have variable income. So each paycheck's a little bit different depending on how much they flew in the prior month. They also have different disability policies. Most of the majors are fairly close, but when you get outside the major airlines, for instance, Southwest versus Delta do disability totally differently. American and United are more similar. Delta's a little bit different. So it's how you are looking at a potential disability and how you plan for that could be a little bit different based on which airline you're working for. There's also new market-based cash balance plans, which other industries don't really have. So understanding how that works, Deltas you're just kind of in at this point, or you're out, depending on what you elected in 2023. But at American United, you can move in and out of the market-based cash balance plan. So it's very different. I think most financial advisors aren't going to understand what a market-based cash balance plan is and how it's managed and how to apply that to your overall growth. There's also great opportunities in airline world right now. We have a pilot client here that has a tag for his car. It says green slip. Green slips are basically picking up overtime. Now there's silver slips at Delta as well. So picking up overtime and doing things, temporarily working a little extra harder to achieve some maybe short-term goals. That's a possibility for a pilot, where in other industries, it's not really that way. You might get a bonus at the end of the year, but you're not able to directly control your pay that much. So that adds into planning as well. Because it's a good time to be an airline pilot right now, we work with most pilots on creating opportunity funds. So we know that the retirement's okay, but it's creating an opportunity fund for other things down the line. So that could be a second home, that could be money in retirement for family legacy type vacation, something you take the entire family to once a year. It could be start a business. It could be a lot of different things inside an opportunity fund, but it's not really earmarked for retirement. It's whatever opportunity comes up. So that becomes a big part of our discussion now, where probably back in my days at a regional airline, it was more about how do I stay out of debt and how do I survive paycheck to paycheck. And certainly times have changed right now. But when you go through our pilot financial planning process, what's really neat is I took our staff kind of through Pilot 101. And so it's not just me, but all of us here at Wiser are able to help the pilot community. I think they really understand what all these things are. In fact, some of our people even know what a V1 cut is. And I think that's kind of funny. Anyway, thanks for watching. If you think we can help you with financial planning, please reach out, wiserinvestor.com. Thanks so much.